Hello everyone and welcome to the next lesson. Today we will focus on testing the quality of our strategies. This quality or robustness testing will tell us which strategies are suitable to start trading them on a demo test account. It will tell us if the strategies have a chance to succeed in the future and not just in the past, because we don't just want a nice backtest. We want the strategy to give us nice profits in real trading. Well, and that's what we have the test for. This lesson is going to be longer than you are usually used to. We will go through all the tests in one lesson instead of going through the individual tests in individual lessons. At least this way you will see and understand the continuity of all the tests better. Plus, when you're setting up on your own device in StrategyQuant, you can watch the video alongside and follow along step by step without having to switch lessons. So, what are we going to test today? First of all, we will test out of sample. That is, the rest of the data that we haven't worked with yet, that we kept just for the purpose of testing. If you remember, we set the build until the end of June 2019, and so we will use that leftover data for out of sample. The second test is made up of multiple steps, but let's say it's one group. This is the test on additional markets and the test for slippage. So we will do a backtest on Euro USD, USD CHF, GBP USD on different time frames, and then the slippage on GBP USD. The last group of tests are Monte Carlo tests, which are specific simulations that tell us even more about our strategies. We do tests on different markets to see how the strategies will, let's say, behave on different data than the data we built the strategy on originally. We use other time frames to see how the strategy performs in different speed markets. But don't worry, I will of course explain everything during the actual tests. We test for slippage mainly to see how the strategy reacts to unexpected situation, and Monte Carlo tests are mainly statistical tests that test specific situations that may occur or situations that we know from our experiences may be problematic. Before we move to the StrategyQuant, there is one thing I want to say, that I've got prepared like 3,000 strategies that I'm going to use for testing. If you have an average computer or laptop, please use only 1,000, make all the tests, then you can test another 1,000 and so on and so on. So now we can go to the StrategyQuant. Here in the builder, you can see my strategies that StrategyQuant generated for me. If you have your strategies saved, just upload them in the retester. So go to retester, simply click on the load icon, use the Ctrl+A keyboard shortcut to select all strategies from the desired folder, and click on select. But if you don't have them saved and you have them only in the builder, like me, you can also quickly move them from builder to retester. So go to the builder, select all the strategies, click retest button, make sure you have apply current config turned on, meaning that the settings that were applied to the strategies in the builder will be applied in the retester, and choose whether you want to copy or move the strategies. If you copy them, you will have a backup in case you accidentally delete them from the retester, but it's a bit more memory consuming. And since I'm working on not like average computer, but it's at the same time not so extra powerful, I will choose the second option and just move the strategies. And now let's go through the tests. Also, there is one very, very important thing. If you loaded your strategies with the first option, after you load them, go to Results, to the tab Strategy Config, and please click on this little button. That's very important because using this button, the retester will use the same strategy configuration as it was used in the builder during building the strategies you loaded. The first test we are going to make is out of sample test. So let's set it up. It's very easy. The only thing we have to do is to switch off the option Higher Backtest Precision in Cross-Check tab. It's a very important step, so keep it in your mind. Now we have to save the data, so go to the tab Data. What I'm going to do is to click on Reset Dates and choose the start day on 1st of July 2019. In this table, I choose the 1-minute data tick simulation because in this case we don't need to save any time testing the higher precision in cross-check. Now we need all the strategies to be tested with 1-minute precision. Move to Ranking, where you switch off average trades per month and return drawdown ratio. And set the profit factor minimally to 1.1 and click on Save. At this moment, that's the only condition we want. If we would switch on this option, Delete Failed Strategies from Databank, then the strategies which would not meet that condition of profit factor 1.1 would be automatically deleted. I am not gonna leave it enabled right now because later I want to show you that you can do that very easily manually. But after all, it's up to you, so that's your choice. So right now I can start generating the strategies. So go to the tab Progress and click on Start. Within a few minutes, my strategies are tested on out of sample. Due to the fact that this is a short period of data, the backtest should be relatively quick. Then we will go through the deleting and get into the other test where I will show you a trick where we can do all the tests from the second group automatically in a couple of clicks and also evaluate them automatically at once without having to do each test separately manually. So let's wait until the first test is done and we will continue. We are done with the test, and as you can see, there are over 2,000 strategies that didn't pass the test and 541 strategies passed the test. These numbers can fluctuate quite a lot. Sometimes half can pass, sometimes not. Of course, randomness plays a role here, but that's fine because we are really only looking for the highest quality strategies. Now, we are going to delete the strategy that failed the test. Click on Tools, Select, Failed, and it will automatically select the ones that failed. Hit the Delete button, OK, and delete these strategies because they are useless to us. I will wait for the deleting process to complete and move on to the next test. A test on additional markets and a test on slippage, which we will do all at once in one simple test. So now we have deleted the strategy that failed and move to the full settings, ranking, and we will turn off the profit factor so we will not have any condition here. We can leave the data as it is, just switch the testing precision to selected time frame and move to the cross-check tab. Here we will turn on the backtest on additional markets option. We click on the middle panel And here we see one market. We will need a total of 5. Euro USD, USD CHF, GBP USD for 2 different time frames, and a test for slippage. So we click on Add Backtest button 4 times right now. So we would have 5 tests here. The first one is for the symbol Euro USD UTC2. The second one is for USD CHF. The third, fourth, and fifth are for GBP USD. And now let's set the data. For Euro USD, we want all the data, so simply click on Reset Dates. The same goes for USD CHF. For GBP USD, I set all the data in time frame M30. For the second test on GBP USD, I will set all data in time frame H4. And for the last test, I set all data again, but also set the slippage to 5 pips. And to make these tests really accurate, for each test set 1 minute precision. And with this, we have set up all the tests from the second group within a single test, just few clicks. So we've got here Euro USD with time frame H1, data full period, 1 minute precision. USD CHF, time frame H1, full period data, 1 minute precision. GBP USD, time frame M30, full period data, 1 minute precision. GBP USD, time frame H4, full period data, 1 minute precision. And GBP USD, time frame H1, full period data, 1 minute accuracy plus 5 pips slippage. Now we need to set up the evaluation. Let's switch to the tab Filtering. Here I now have Profit Factor Additional Markets, Market 1. So I have to add 4 more. And for each one, I will set backtest from, backtest on additional markets, sample full, and here is market 2 because this is our second market. For the third one, I will set the same thing, so backtest from, backtest on additional markets, sample full, but I will select market 3. For the fourth, that's also the same, so backtest from, backtest on additional markets, sample full, and select market 4. For the fifth one, again, backtest from, backtest on additional markets, sample is full, and market 5. Looking at it now, it's probably clear that this last profit factor, for example, will evaluate the results of the 5th test we set up. The 4th for the 4th, and so on. And what results do we expect for each test? Let's get back to our slideshow. For Euro USD, we want a profit factor of 1.2. For USD CHF, 1. For GBP USD on M30 time frame, we want 1.1. For GBP USD on H4 time frame, 1.3. And for GBP USD with slippages, 1.2. So let's set it. Euro USD 1.2, USD CHF 1, GBP USD M30 1.1, GBP/USD H4 1.3 and GBP/USD with slippages 1.2. Now just click on Save and we can start generating. I will explain why we are actually doing all these tests, but first we will finish the test and look at the results, and then I will show you directly on the charts from MetaTrader why we are doing these individual tests. But now let's get started. I'm going to move to the Progress tab and click on Start. And actually, in between running our test, I can explain why we are doing these tests. And the logic is very simple. Here I have GBP/USD H1 chart, and that's the market that we are building this strategy for at the first place. This is the market that the resulting strategy will trade on. But we don't know what this market will look like here on the right white part. We only see the history. Therefore, our goal is to test this strategy in other market conditions, but at the same time to stick to similar market conditions. So we are looking for similar markets, which in the case of GBP/USD is EUR/USD, on which we will test how the strategy works. So this is what GBP/USD looks like. This is what EUR/USD looks like. So relatively little similarity. And then there's USD/CHF, which is already really different. But we don't mind that because we will see how the strategy behaves on it. But if we look at our spreadsheet, you will notice that on USD/CHF, we only expect it to be at least in profit, and on EUR/USD, we want reasonable profitability. And then for GBP/USD, we use additional timeframes, and that's because timeframe M30 has the same market structure, but it's much faster. So we are testing how the strategy behaves in, let's say, faster markets. And H4, on the other hand, is slower. So we are testing how the strategy behaves in slow markets. By testing the strategy in other markets and other timeframes, we test the strategy's sensitivity to market structure and speed. The last thing we want to test was slippage. So we will switch the EUR/USD market to the M1 timeframe in this chart because the slippages happen mostly within that kind of timeframe. And we can see that occasionally there will be situations where there's some really strong movement. For example, here, one candle here is 1 minute. And within 1 minute, there's this strong movement, and these can be even more significant when there's some kind of significant event. And the moment that happens, we have a pending order, for example, here. But it may be that the order execution happens at a much worse price than we actually wanted, which of course affects the outcome of our trade. We may have a higher potential loss or a smaller potential profit, and so on. In our experience, the average slippage that occurs in the markets over the long term is between 0.5 and 1 pip. So slippage means worse execution, entry at a worse price that we originally wanted. However, as part of the robustness test, we want the strategy to handle much worse results, for example, these 5 pips on each trade. There, I would like to say one important note. We can only afford to test such large slippages for strategies on a 1-hour time frame. That is, when trades are 12 to 24 hours long. If you wanted to build strategies for a 5-minute time frame, for example, and build trades that are only 1 hour or 30 minutes long, that requires a very different approach and is more for experienced traders. That is why we do not deal with such trades here, and please do not try that either. Lower time frames have their own specifics, so we recommend trying it when you have more experience. Okay, our tests are done, and you can see that 522 strategies failed and only 19 strategies passed, which is a lot of garbage, but on the other hand, that's after 5 tests, so it's certainly nothing to worry about. If you are doing these tests on the sample of 1000 strategies and you would have nothing left, don't be worried, just test another package of 1000 strategies, okay? If we open the strategy that failed and look in the equity chart tab, you can also view all the charts separately. There is a drop-down menu in the left corner where you can select the appropriate market. Then we have portfolio, where we have all the curves embedded in one chart, and portfolio parts only, where we can see all the individual curves. And now we are back to the leading strategies that have failed. So click on Tools, Select, Failed, and Delete. From now on, we will work with the remaining strategies so that this number is not so high. What we have to do now are Monte Carlo tests, and there are 2 types. But first of all, before we get into it, we need to go to the full settings tab, to data, and set the full range of the data, and turn on back 1 minute precision. Now move to the cross checks and turn off the backtest on additional markets option. Now we are going to do a test of Monte Carlo trades manipulation and Monte Carlo retest methods. These are the 2 types that I just mentioned a few seconds ago. We will find the first test in the second row and the second test also in the second row, but in the second section of this page. The difference is that in the first case, we do only 1 backtest and then we do simulations on the historical backtest. In the second case, we do like 200 backtests for each strategy, so it is much more time consuming. Now we will turn on Monte Carlo trades manipulation. Click on the middle panel and turn off the first option that is checked here. Randomly skip trades with probability 10% is on. Of course, we can change the probability, but in our experience, 10% is fine. And we will still set 200 simulations here. This test takes the backtest and randomly skips 10% of the trades. It will do this 200 times and calculate some statistics from that. I will show you exactly what it calculates on that result. As far as filtering is concerned, we will delete the 2 conditions we have here, and instead we add return drawdown ratio that we compare to return drawdown ratio as well. The Monte Carlo test will tell us what effect the simulation has on the profits and drawdowns, how much it affects the results of the strategy. And we want the return drawdown ratio from the Monte Carlo test to be at least half of the return drawdown ratio from the original strategy. I open the value on the left side and select Monte Carlo trades manipulation. Confidence level 95%. Now, this value must be greater than or equal to the value on the right, which we set main data, sample full, and turn on apply percentage ratio and select a value of 50%. So, I want the return drawdown ratio from a Monte Carlo test with a confidence level of 95% to be greater than or equal to 50% of the original return drawdown ratio. It may sound complicated right now, but I will explain it further on the result, where it will be much clearer and easier to understand. Now I will again move to the progress step and start the generating. Now it's going to be really quick because we only have a few strategies left here. So let's wait for it. And now we can go through all the strategies. You can find the result of the Monte Carlo simulation under the Monte Carlo test tab when you open the strategy. And on the chart you see a blue thick line, and that is more or less the main backtest. This is actually the same as what we see if you would switch to the equity chart tab. So that's actually the same. Around that blue thick line we have 200 other thin curves, just those 200 simulations where we missed 10% of the trades each time. A confidence level of 95% means that 95% of these results has this or better results. When we look at confidence level 100, that's actually the worst result. And we want the strategy to have at least half of the original return ratio at the 95% confidence level. And at this point, we are down to the last test. So we switch to full settings, cross checks, and here we turn off Monte Carlo trades manipulation and turn on Monte Carlo retest methods, which will be more time-consuming test. We will set it up, run it, and then I will explain what this test actually does. I will click on the middle panel and just select the last option, just the one last option from the list. Randomize strategy parameters with probability 10% and max change 20%. I will set both probability and max change to 20%. And again, I set 200 simulations. If you have a slower computer, you don't have to put 200 simulations. You can put 10, then 20, then 50, then 100, and then 200. I will switch backtest precision to 1 minute data and enable the use full sample option. Now it's time to set up the filtering, which will be exactly the same as the previous test. So return drawdown ratio on the left side with the backtest from, and please note there is a change, Monte Carlo retest methods, confidence level 95%. This value must be greater than or equal to the value on the right. So also return drawdown ratio where we set main data, sample full, turn on apply percentage ratio and select a value of 50%. Now I just want to tell you why this testing is actually so slow. It's because you can't simulate this from an already completed backtest. I have to take each strategy and do 200 backtests on it. So if I have like 40 strategies here, I'm going to do 200 backtests for each of one, which is like 8,000 backtests plus these 40 basic ones. And just because it's a time-consuming test, we do it as a last point. So let's run it. In the meantime, I'm going to open one random strategy here, and I'm going to move to the tab Source Code. Here I can see how the strategy works. In the source code type drop-down menu, you can choose what kind of source code you want, if an easy language for multi-charts or for Forex, MetaTrader 5. But what I am interested in now is the pseudo code, which describes the logic of the strategy very simply. And I see here that this strategy uses open below Bollinger Bands and open above Bollinger Bands, which is not like relevant at the moment, but in short, you can see that it uses some parameters, that I've got some conditions here, including stop loss and profit target. And what this last test of ours does is it takes those parameters and changes them by plus or minus 20% with a probability of 20%. Now we can say that in every backtest it takes the fifth parameter and changes it. For example, if it takes this parameter that has a value of 50, it will change it so that the value is between 40 to 60. Because it happens quite often that a strategy is built in such a way that it only works with the specified parameters, but when these parameters change or they are broken, the strategy doesn't work, and that's wrong. It just wouldn't work in real life. So this test is the most important, but unfortunately very time consuming. So now let's wait for the results of the last test. And finally, I've got my final strategies here. When I open the result of the strategy that didn't pass, you can see that the results can be really, really bad. And well, there's nothing left to do but remove the strategies that failed. So in the end, we're left with only a few strategies out of the total number. And again, if you have nothing left out of 1,000 strategies, don't be at all scared and test another bunch of strategies in the same way, another 1,000 like I mentioned before. If you have, on the other hand, a lot of strategies, which of course can happen, we have an extra lesson for you in which we will show you how to filter those strategies additionally. And that's all for today's lesson. It was an extensive lesson full of new information, full of various steps. So if anything is not clear to you, post your questions in the discussion forum in the member section, or feel free to send us an email at lab@strategyquant.com. Thank you very much for your attention. I hope you like this lesson, and see you tomorrow.